morning, everybody. It's Monday, March 18th. This is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. If you've got any questions or comments or would like to chime in on anything we're talking about, please drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets had May corn up 3/4 at 437.5. May soybeans were down 3 at 11.95 1/4, and May Chicago wheat was up 8 1/4 at 536 3/4. Nothing in the way of export sales announcements here this morning. It's, by all estimations, a pretty slow news morning, to be honest with you. We were talking a little before the show, how choppy this thing has become the last couple of trading sessions. We did have a really strong NOPA number out on Friday, came in well above the estimates at 186.2. And there was some short covering in the corn and bean complexes over the last week or so, and it looks like they got a little shorter wheat. So, Jace, just some trading comments in general, and then we'll throw it around the room there.
Yeah, sure. Just before we started the show, we were just, obviously kind of slow news day. Dan asked me my thoughts. I don't really have any general ideas on the market. Like I said, kind of the same stuff we've been talking about last couple of weeks. But yeah, the trade feels like, from a trader perspective, the markets get a little excited, around moving averages. Let's take beans, for example, even soybean oil. Days that are up, then they close unchanged, and the next day we're down, and then they rally in the end of the day. So you could look at a chart of beans or soybeans or corn or wheat. Even wheat's been doing it for a while. Every time the market feels like the wheat market feels like it's turning around, it's you should probably sell it, because in a couple of days it's going to look horrible, and then that's probably a buy. So that's just kind of the trade that we've been seeing for a while. And corn and beans are, like I said, we've had this nice rally. We're up to these resistance levels, be it the 50-day in beans or in corn. Soybean oil is a little better, kind of chopping around the 100-day now. So yeah, just a chop trade going in the month. Wouldn't surprise me going into a really big key report.
Yeah, Justin, I saw we with that big crush number, oil stocks were above estimates as well. So we continue to see a build in oil stocks there. Oil was just a little lower overnight, but any thoughts there?
Yeah, I mean, we rallied heavy off of it because they were higher, but crush was 10 million higher than they guessed. So implied usage of soybean oil is huge. So I think, stocks did build, but we had to crush 10 million more beans to do it than we thought. So yeah, no, good numbers. I mean, it's, I think we're trying to build a base in these markets. It's, as we've talked about, for a long time here, there's a lot of headwinds, but we're going in the time of year and demand seems to be upticking. We get, people are starting to look at weather more, both in South America and now in the US. You're March 18th. A lot of people are anxious to get out in the fields. So you're going to start really looking at, we're going to get a big snow system that comes through and slows things down a little bit, or, you kind of got everything that here you've got kind of, we need rain in the Midwest. It's really dry, which can be helpful for planting to get done fast. So you can kind of, I think, spin the weather however you want to right now. And that probably adds to the choppiness, right? You can kind of convince me that there's some, bullish factors happening in weather, or that there's bearish ones. And you kind of have both things going on right now. So yeah, I agree, Jason. It's choppy. If you try to get excited on a rally or sell on a break, you're probably going to get run in. And it's kind of those markets we've been kind of thinking might happen here. It's kind of building a base. It's kind of working a little higher, but there's nothing good enough to make the market really go a lot higher from here or a lot lower. I don't think. It seems like we've ran into demand on the lower end, and maybe farmers have sold enough for now, and we can't really afford to rally too much either right now because there's too much supply above the market and those kinds of things. So unfortunately, stuck here for a little bit.
Yeah, you bring up a great point. I mean, it's, we talked to a lot of farmers, and it's, 470 to 480 D's corn doesn't get anybody that excited. That's not.
Well, you've got crop insurance, right? And I think a lot of the recent selling, call it the last 30, 60 days, and probably what maybe through the end of the month, is what has to be sold for cash needs and bank loans and all those sorts of things that we've been talking about. But as far as a flat price and profitability, like it's not an exciting price for anybody.
Mm-mm.
So, and unless you're getting, I think unless you're getting north of like $5 cash corn or, $12.50 cash beans, it's probably not an excitement there for a lot of growers at this stage.
Yeah, and we've seen that there have been some products that have been put together just in new crop beans where some of those premiums, maybe, I don't know if there was an uptick in volatility. You guys would know better than I would from this last week or whatever, but there did appear to be some premium type things that you could do in new crop beans that were attractive.
Yeah, there is, there's always, accumulators and some different types of products that, you can't do too much this early, but we are on an 80-cent rally off the lows in November beans, right? So if you can start looking at, things that get you a $12.50 type price, for example, that's putting you $1.30 above where we were, but probably a decent area to start, at least get some sales. So we are seeing some of that. Corn is 30 cents off the low, and I think it really depends on what crop insurance you elected, kind of where those floors, look to be. And then you gotta decide the product around that. What you don't want to do is, if you've already got really good coverage on some other things, to go lock yourself into some double ups that aren't that, it seems like they're a good price, but they're not that far above the market. And if you were to get into a low yield situation, you could actually be working yourselves into, getting locked in at below break even prices on double up. So you just got to understand how they all work. I think that's the important part.
Yeah, and we've talked about that a lot. It's identifying the product you'd like to use. How does that affect you at any yield and price, and what your overall commitment is, and are you comfortable with that? Especially mid March.
Yeah, the outcome, right? And I've seen people make a lot of mistakes on these types of things where you feel like you have to do anything to get a premium, but at what cost, right? So it's always important to kind of run those scenarios and see how that's kind of fit in with everything else that you've done. And if it looks good, then do it, and you like it, but just make sure you fully realize what you're getting into. So.
Sure. Right. I saw last week, pork and cattle slaughter finished the week higher. What's your overall writing opinion on livestock as we head into a new week here?
Yeah, I think that was a little bit of a shock to the market, to be honest, that all of a sudden slaughter came up 3%, so it just seems that, these guys are keeping the chains running here. So I think that's definitely a little bit more optimistic. The market was pretty cautious last week because it started off on such a lighter tone and has been. I mean, it's still well under last year, but it's some improvement for sure. I mean, cash was up about $2 to $4 in some area, 187 to 190 in the north, still up $1 in the south. So this continues to go, even though packer margins are expected to be pretty tight here, if not in the red. So that is definitely a problem the market's got to face. But we're kind of coming into the seasonal time frame where it's all systems go. We're gearing up for grilling season. We got to keep everything moving. So that's just, there's no way around that. This is where demand's going to really start to peak. So at this point, the market is definitely cautious, and we're going to be looking at cattle on feed report on Friday. We'll have estimates out middle of the week. Just to kind of see where everybody's head's at. But overall, the market's pretty aware of how tight the supply is. We're keeping these premiums, had been keeping big premiums in the market, but now the overall expectation is that cash premiums are going to start to lead the market higher, after as we get into April. So we'll see, but overall, it's still a pretty friendly trend right now. Still well-supported market. The Packers, even though they're losing money, are still going to be keeping kills probably at some kind of equilibrium, try to cut where they can, but we got to see beef prices really strengthen here, which they typically do seasonally. I think everybody's trying to eyeball the 350 level for choice beef coming into the summertime. So not great for the consumer on the consumer side of things, but overall, it will be better for the for anybody that's got to market cattle during that time, if that's really going to happen.
In the feeding sector, Ron, I mean, 470 new crop corn or thereabouts and stuff like that. They're still seeing very favorable margins from the feeding side, correct?
Yeah, margins
and where they're at.
Yeah, margins are still very favorable. Feeders, I think just overall, the demand for these younger cattle have just not slowed down whatsoever. Every break in the board is bought. All these auctions are just, people are paying prices that are kind of mind-boggling right now. So it's just that sentiment right now is just get the cattle. We've had really good grazing conditions, really good pasture conditions with the weather. So if that continues and we don't run into some kind of a drought, we're really going to be shaping up to expand pretty well, I think, but maybe a little bit too soon just to call it, so we'll just kind of take the data in stride as it comes.
Oh, very good. Well, fellas, it's a pretty short news day to start the week, so we won't just sit and hear ourselves talk for the sake of hearing ourselves talk. Hope everybody has a good start to the week. We're lining up pretty much in line with the overnights here. If you've got any questions today, please don't hesitate to reach out, info@agyield.com. Give us a call. Love to visit with you guys. So every day that the markets are open, we're streaming live at 8:15 Central Standard Time on X, Facebook Live, and YouTube Live. So I hope everybody has a good start to the week, and we look forward to talking to you tomorrow morning.
All right, thanks.